Hello everyone, my name is Hitesh and I welcome you all to TradeBrains YouTube channel. Now through this video, we'll be talking about one of the most important concept in a day trader's life, as in what is the concept of scalping, what do we mean by it, how is it different from other forms of trading style. We'll be talking about all those in detail through this video, and at the end of the video, I'll be giving you a live demo how do you spot trades on the chart using the scalping methods. So do stick on to there to understand how do you trade a scalping in your day-to-day trading by using just simple charting tools. So let's begin our discussion on that. So before getting into the features and the characteristics of scalping, let us understand what are the four different types of trading styles. The first is day trading. So day trading is that form of trading style in which you enter and exit your trades on the same day itself. The second is swing trading. Swing trading is basically more level based trading. If you see certain swing or arc formation in the market on the charts, you get a trade based on that, and you ride on the move based on that. The third is positional trading. Positional trading is a very long term form of trading. It is that form of trading style in which you take on a trade and you wait for your next level to come in the market and you exit your trades accordingly. And the fourth one, which is going to be a central part of discussion of this video, is the scalping. So scalping is a form of day trading, but it is more short term than day trading also. In this form of trading, you just take a trade and make a quick profit. Sometimes the trades last for seconds also. Supposedly if I've entered certain trade at 100 rupees and if my scalping target is 101 rupees 50 paisa, if the price is reached within a matter of seconds, you just exit your trades. So that is how the scalping works. And if I were to bifurcate these four kind of trading styles based on the risk to reward ratio or based on the kind of difficulty of the trade, I would say the most difficult form of trading style here is the scalping methodology. The second most difficult is day trading, the third being swing trading, and fourth being positional trading. So in all forms of trading styles, because I personally being a trader for myself for almost more than 10 years, I would say scalping is the most difficult form of trading in the market. So scalping is that form of trading style in which the whole idea of the trade is to make small profit from a small movement in the price of shares or the stock of the company. And in day trading, scalping is a term for strategy or to prioritize making high volume of small profits. So basically the idea of scalping is to take large volume transaction and make small profits out of it. That is the basic premise of doing scalping in the market. So what are the features of scalping? The first is small profit. So as you enter in a trade, the idea is to make very small profit. It is not for large profit transaction. It is sometimes for as small as 1 rupee 50 paisa on the shares of a company. You enter with large volume of shares and you make small profit out of it. There is no greed factor in this. It is just a pure market price action trade. If you see a certain amount of trade opportunities coming in, just enter your trade and make small profits out of it. The second is the limited holding period. As I've told you, it is day trading by nature, and even in day trading also it's divided into very small time frames. So the amount of holding period is very less. It is normally a few minutes to like half an hour, but sometimes even the scalping trade can end within a matter of seconds also. The third, it's multiple trades during the day. So this is the main attractiveness of this kind of trading style. So when you're doing trading based on scalping style, you get number of in and outs for the day. You can sometimes get about 20, 30, 40 trades in a day. So that is how fast the scalping world trading is. So you have to be very alert, very attentive, and the most important thing to understand here is not to enter too many scalping trades at one go. Focus on one trade, take that trade, make profit out of it, and then move on to your next trade in the market. And it's for a high volatile market, so we shouldn't do scalping trades based on very small volatility. Volatility is a friend of scalping. So when the market is volatile is when you get a lot of scalping chances, and you should book your profits immediately as in when the trade moves in your direction. And this is the most important point of scalping. Many people ignore it, but when you are doing scalping, you have to be very focused and your decision making has to be very fast. You cannot be thinking after taking a trade. Before your trades are entered, you have to be very focused. You have done your research completely, and then you take trades based on that, and you just follow the rules which you set for a trade. Don't think too much after taking a trade. Have a set stop loss, have a set profit, and put your orders accordingly. As in when one of them is triggered or the profit is achieved, you pull out the other trade from the market. So very focused on your trades, and your decision making has to be very quick while doing scalping in the market. Now, what are the few things which we should keep in mind while taking a scalping trade? We should always look for high volume stocks. So what happens? There is no gap in the prices, and it's easier to get filled in the market. You shouldn't trade scalping on those trades where the spread is very high. Supposedly, when I'm saying spread is very high, if I were to give an example of say If the shares of XYZ company, the bid price is, let's say, 101 rupee and the ask price is, let's say, 103 rupees, those are not good trades for scalping. You would ideally want not more than 5 paisa or 10 paisa gap between the spread of the shares. So that gives you time to exit from the market, and sometimes even if the trade goes wrong, you can book your small losses. Because if you have too high a spread, then your losses will also be bigger because you will have to exit at a very bad price in the market. So look for high volume stocks and look for stocks which have small spread in the market. And most importantly, take the trades which suit your trading style. If you are someone who likes trading on the bull side, or if you are someone who likes to trade on the bear side, and if you get a trade opportunities based on your trading style, that is the best form of a scalping methodology. Trade in the field of scalping, never trade out of your comfort zone. If your trade is within your comfort zone, you always get better trades in the market, and you'll start thinking in a fresh and a better way when you're doing a trades which suits your trading style. And this is very important. Always have a stop loss for your trade, especially in scalping. Never leave your trades without any stop loss. Always face your stop loss on the screen, because if you don't do that, sometimes as a human tendency, we keep on holding to our loss making position thinking that the market will come back. But if the market doesn't come back, you can lose all the money which you could have made in months within one trade also. So that is why always have a stop loss for your scalping trades in the market. And start always slow, as I've already told you, and it applies to all the walks of life. If you have to start very slowly with small amount, because scalping is an art which you learn with time. No one is born as a scalper. You do your trades, small trades with 1 share, 2 share, 10 share, 20 shares, and you grow in your confidence. As and when the confidence grows, your size in the market also can grow up. And it is very important to understand, once your size has grown up, doesn't mean the size can't come down. If you're low on confidence again in trading, you have to reduce your size and again go back up to your style in the market. So these are the most important characteristics or things to be kept in mind by first scalping. You should trade in high volume stocks, take trades which suit your trading style, always have a stop loss for your trade, and start slow in the market. And now the thing which I'll try to say in this is that what kind of market we should be trading. For example, if you're doing scalping purpose, I would say indexes are good for scalping because they work on level based trading, and their whole fundamental picture covers the whole economy as well. So something like a bank nifty, something like a nifty or nifty financial service indices are good for scalping. And if you're looking at the stock per se, I would always say go for large cap stock. Mid cap and small caps have big spreads in their prices, but the large cap stocks have small spread on their prices, which is where it gives you good scalping opportunities in the market. Now I'll be giving you a live demo of how do you take a scalping trade in the market. I have chosen the chart of Nifty here. Now if you look at this Nifty chart, I have plotted a 50 period simple moving average, and at the lower hand of the chart I have plotted a MACD, that is moving average convergence and divergence chart. So I'm taking my scalping trades when I'm getting confirmation from both the charts. And if you look at this chart, as and when the market goes towards the 50 period DMA, even the tone of MACD is bearish because it's trading below 0. So there is weakness in the market, and when the market touches that MA, it gives you a very good dip in the market and you book your profits very fast. So you have to wait for your opportunity in the market as and when the market has come again back closer to the 50 period moving average. And if the MACD is still supporting my view of bearishness in the market, I take my short position and book my profit. You got multiple trade opportunities in the market here. As and when the market went towards the MA, you got a short in the market and you book your profit immediately in the market. Always have your stop loss above the MA here. As if the stop loss gets triggered, it's well and good. Sometimes the stop loss get triggered in a false way, but that's how the nature of trading is. Sometimes even your right trades also have to book losses, but which is fine. If you follow your trading discipline, you're bound to make money in this market. And if you move towards the right hand of the chart, you saw that the MACD has gone towards the positive territory. So the 50 period on the downsides didn't hold. So these are the trades which we should avoid, because MACD gave you a positive divergence on the upside. So scalping short was never a question. You just had to avoid this trade. So as and when the indicators which you religiously follow, if you understand those indicators, use those indicators in short-term chart period. I have used 10 minutes for my reference. It could be 5 minutes, 15 minutes, 30 minutes depending on your trading style. And if those indicators give you a signal to buy or sell in the market, do your scalping trades based on that. I've used MACD, some people use stochastic, some people use Bollinger Band depending on your trading style. So for the reference sake, I have used 50 period moving average and MACD to give you a demo of how to use scalping in the market. The second example is the case of TCS here. If you look at the chart of TCS, again I've used a 50 period moving average and I've used MACD, that is moving average convergence divergence. There is positive divergence in the market and the market is trading above 0. So as and when the market came from up on the downside. As and when the market came near the simple moving average, it gave you a buying opportunity market, and there was still a positive divergence in the market, so you got good scalping buy in the market. You kept your stop loss below it. It could have triggered your stop loss at these points, but as I said, these are the nature of market. It sometimes triggers your stop losses, but as long as you follow discipline, you get good trading opportunities in the market. And if you look at towards the right hand side, the place where I've circled here, this is a point where the MACD gone into negative territory. So this was a point I am to avoid long trades in the market and not look for scalping opportunities on the buy side. I hope this simple presentation and demo gave you a brief of scalping. What is scalping is, what should be done, what should not be done. I hope this video was informative. I hope to see you in future videos of financial education. Thank you so much.